Before you hire an interstate moving company, there's one critical topic you need to understand: valuation. Now, I know that word sounds like insurance industry jargon, but stick with me. This is probably the most important decision you'll make about your move, and most people don't realize it until it's too late. So what exactly is valuation? It's actually a term that's unique to the moving industry. You won't hear it anywhere else. Valuation defines the limits of what your moving company is legally obligated to pay you if your belongings are lost, damaged, or destroyed while they're moving them. Think of it like this. It's similar to insurance, but it's not quite the same thing. Here's a helpful way to think about it. When you buy life insurance, you choose whether you want a $100,000 policy or a $1 million policy. Your life has the same moral value either way, but you're choosing how much the insurance company will pay out if you pass away. And of course, the higher the coverage, the higher your premium. Valuation works the same way. You're choosing the maximum amount of money the company will be responsible for if something goes wrong. Now let's clear up the confusion between valuation and insurance, because they're definitely not the same thing. Federal law requires interstate movers to offer it on every move. Insurance, on the other hand, is a separate financial product. Here's the key difference. Valuation only covers your belongings while they're in the mover's physical possession, and only for damage caused by the movers themselves. For example, let's say the movers are carrying your dining room chair and they accidentally drag it across your hardwood floor, leaving a scratch. The moving company is responsible for that. It's covered under valuation. But if you drag that same chair across the floor after the movers leave, that's on you. The moving company has zero liability if you do the damage. And another important point, if something goes wrong, you file your claim with the specific moving company whose interstate authority was used to transport your belongings. And they're the ones that have to pay out, up to the limits you have selected. Federal law requires every interstate moving company to offer you two valuation options. Let me break them down for you. The first option is called release valuation, and it's always free. Free sounds great, right? Well, here's the catch. With release valuation, the mover's liability is limited to just 60 cents per pound per item. Let me give you a real-world example so you understand how little coverage this is. Let's say the movers pack your 65-inch TV, and during the move, someone drops it and the screen cracks. That TV costs over $500 to replace. But under release valuation, you're not getting $500. You're getting reimbursed based on the item's weight. Here's the math. That TV weighs just 35 pounds. So your reimbursement is 35 pounds times 60 cents per pound. That's $21. $21 for a $500 television. Release valuation is designed to provide minimal protection, not full replacement coverage. You literally get pennies on the dollar for damaged items. The second valuation option is called full value protection. This valuation option does cost extra. The price is based on the weight of your shipment and the total value you declare. You can also choose a deductible, which will lower your premium. With full value protection, if something is lost or damaged, the moving company has three options to make it right. 1, they can repair the item to your satisfaction. 2, they can replace it with a similar item. For instance, if one plate from your china set breaks, they can find a replacement plate with the same pattern and condition, maybe on eBay or through a dealer. Or 3, they can pay you the current replacement cost. Pretty straightforward. They give you enough money to buy a new item that's as good as the one that was damaged. Now, before you decide, there are 3 critical things you need to know about full value protection. These are the details that trip people up. First, there's something called the salvage clause. If the moving company replaces a damaged item, they have an option to keep the damaged one. So let's say your stainless steel refrigerator gets a big dent in the door during the move. The company agrees to replace it with a new one. You can't keep the dented fridge and get a new one. You either accept the replacement and give back the damaged one, or you keep the damaged fridge and accept a cash payment for its reduced value based on its appearance. Second, and this is huge, full value protection only covers the contents of boxes that the movers pack themselves. If you pack your own boxes, what the industry calls PBO or packed by owner cartons, these are almost never covered. The only exception to this rule is if the outside of the box shows obvious damage or mishandling. And if you claim something is missing from a box you packed yourself, the moving company will not cover missing items in a PBO carton, period. So, if protection is important to you, consider having the movers do the packing. Third, full value protection has a limit of $100 per pound per item. Anything worth more than that is considered a high value item. What qualifies as high value? Well, think about smaller, lightweight, but expensive items. Your laptop, your smartphone, jewelry, antiques, collectibles, expensive artwork or decor. To get coverage for these items under full value protection, you must list them on a special high value inventory form during the moving process. This gives the movers the opportunity to properly prepare and protect these items during transport. Before you commit to any valuation option, do yourself two favors. First, take a full inventory of your items and estimate the cost if you had to replace all of it. Walk through your home and really think about what you own, both standard household items and those high value pieces. Clothes, furniture, tools, books, artwork, electronics, everything. Make sure you're comfortable with the maximum coverage limits you're suggesting. Second, call your insurance agent. Check whether your homeowner's or renter's insurance policy covers damage during a move. You might already have some protection in place, which could influence your valuation decision. Let me wrap this up with the most important takeaway. Valuation is not insurance. There are two different types of protection. Valuation is the moving company's legal liability for your belongings during transportation. It is mandated by federal law and defines what the mover owes you if something goes wrong. Insurance is a separate product that may cover additional risks and circumstances beyond what valuation covered. For an interstate move, choosing the right level of valuation, often full value protection, is one of the most important decisions you'll make. Don't just go with the free option because it's free. Think about what your belongings are worth and what you'd need to replace them. That's it for understanding all the base component transportation charges. In our third and last module, we'll cover all the additional services interstate movers offer, things like packing, storage, and specialty item handling, and how those services are priced. Thanks for watching, and we'll see you in the next module.